Right, so I'll make a start. So as I just mentioned, my name's Chris. I'm one of the partners at Charnwood Accountants. I'm joined by Paula Wheatley, who's also one of our partners and heads up our solicitors team. So today I'm just going to take up an hour of your time. I hope to finish by 2 o'clock so you can carry on with the rest of your day. And we really want to cover two areas today. The first is in relation to the COVID support measures being introduced by the government, how you can maximise the use of those, and just a recap on some of the measures that have been available for some time and are still available, and just to make sure you're capitalising on those. And the second part will be on how to maximise profitability and manage your cash. A lot of people are taking on a lot of debt at the moment, so getting your cash planning is absolutely crucial. Throughout the webinar, please, if you've got any questions, do raise a question in the Q&A session. And if you're happy to, we'll unmute you and you can come on to the webinar and ask your question directly. Or if you'd prefer, just leave it in the chat box. We can come back to you through the chat facility on here, or we can make contact after via email and have a phone conversation to answer any queries that you've got. Again, as a follow-up, we'll provide you with our contact details after the webinar. So if anyone has any further follow-up they want to do after the meeting, then by all means do contact us. So I'm just going to pass over to Paula now, just to go through some of the COVID measures that are available.
Hi everybody. So obviously, as Chris said, these are very unusual times and the government has provided a lot of support for people out there at the moment. Some of the support measures are coming to an end or changing slightly, so it is just a case of making sure that you are making the most of what's available. So if we start with the coronavirus job retention scheme, Chris, would you mind clicking to the next slide for me?
Oh, sorry, am I not sharing?
Yeah, you've still got control.
Okay, what screen can you see at the moment, Paula?
What support is available for businesses, so the opening one.
There we go.
Perfect, click once more for me. Perfect, so a recap of the scheme. So as it stands up to the 30th of June, this is, all UK employers with an active PAYE scheme can access financial support for their employees' salaries. This is by way of a taxable grant, which is 80% of their salary, ERS&I and pension, up to a cap of 2,500 on the salary. It was questionable at the start what support was available for directors, but it was confirmed fairly early on that directors can also be furloughed and carry out their statutory duties as directors, as long as they're not actively seeking business or doing work for customers and things like that. One major thing that you could have missed, which does need to be dealt with, and I suggest dealing with it now if you haven't done so already, is if you did put any employees on furlough, you should have put this in writing to them, and they should have also written back to you to agree their confirmation of this. If you haven't done this and you do need some templates, we've been working with a HR consultant who put together some example letters for us, so we'd be happy to send this out to you if you want to drop me an email after the meeting. And also just to confirm that you could rehire any employees that you made redundant at the end of February due to COVID-19. So if you did that purely because of what was going on, you could rehire them and then put them on furlough so that you could try and retain them for future. So moving on to the next slide. So basically the scheme as it stands, which was very generous, was never going to last forever. And so governments have brought in a new version of the scheme. We'll call it version 2 for the sake of this webinar. It did last a lot longer than all accountants or other professionals expected it to, and it is going to run until the 31st of October. We believe it quite unlikely that it would extend any further after that date. But on the 29th of May, Rishi Sunak outlined all of the changes that were going to be made, and these have now all been put on the .gov website for you to read as well, so it's all very clear. But basically from the 1st of July, you can bring back furloughed employees to work any amount of time in any shift pattern, and you can still claim the grant for the hours that they did not work. So basically it's enabling you to allow an employee to return on a flexible basis, which in this case is going to be a lot of people probably with children that are still not at school or nursery. So they're saying you could come back 2 days a week when their partner's able to look after the children or something like that. The cap for the furlough percentage is based on how many hours they work. So if they only work 20% of their hours, you can claim 60% of the cap. And also you can only have employees furloughed now who were already furloughed before the 10th of June. So if you've got any employees that you didn't furlough, but you're thinking you now might want to, you can't do that now. That's past, I'm afraid. And any employees that you are furloughing must have had at least 3 weeks furlough prior to the 30th of June. And also the maximum number you can claim furlough for is whatever your highest number of claim was on the 30th of June as well. So if you had 10 employees furloughed at the 30th of June, you can only ever have a maximum of 10 now through to the 31st of October. So on to the next slide. So from August, they will still pay the 80% pay. However, you will have to cover the employer's NI and the employer's pension payments. From September, that's reducing to 70% of cover rather than 80%. And from October, it's reducing down to 60%. The whole point of this is that they're trying to encourage employers to bring employees back into work. And so by them reducing the pay that's available, it's sort of forcing the issue for you to get them back there with you. So moving on to the next slide. So I've got an example for you of how this is going to interact with your possible thought processes. So if you've got an employee who is still on furlough, you might be prolonging the inevitable issue that actually there could be a redundancy later down the line. So if we work through an example, if you were to keep an employee on 30,000 salary a year furloughed when you were questioning whether or not to make them redundant, from August you'd have to pay £209.95 of their salary, from September £459, and from October £709. Now if you'd made them redundant on the 30th of June, and I'll give you a scenario, you had a 34-year-old person who'd worked for you for 4 years on a £30,000 salary. If you were to give them statutory redundancy pay for the 30th of June, that would be £2,152 for the statutory element. Now, these three figures that are showing on the screen now already add up to £1,300. So if you were to keep them on furlough, you'd then have to bring them back and pay them their full salary as their notice period, plus redundancy pay later down the line. So it would come to a lot more money for you and make it one of those things that you perhaps should have thought about it sooner rather than later. So it's a case of if you are thinking about redundancies, it may be worth getting the ball rolling because you can save some of that time for the redundancy and notice periods. One thing to ensure that you do though is keep good paperwork, including the furlough agreements, which I've already mentioned, all of your calculations of the costs that you've claimed from the HMRC and why the staff were furloughed. These not only will help you with your redundancy processes going forwards if you were to do so, but there is a good chance that HMRC, after all this is over, are going to do some PAYE visits to make sure people weren't claiming incorrectly for the furlough amounts. So proper paperwork in place to prove all the calculations is really, really important. And just a reminder that the furlough payments are taxable, just like you'd have had tax relief on the wages payment in the first place. So make sure that you build these into your calculations. Okay, next slide. So another support measure that was made available to people was the deferral of the payments on account, 31st of July. So this is available for self-employed individuals, but also directors and partners of companies where you've got a payment on account based on your dividend and salary amounts. So if you've got a payment on account due at the 31st of July, you can choose to, but you do not have to, defer this until the 31st of January 21. So when your tax return's due, you would basically pay that second payment on account, your balance in payment, and your first payment on account for the next year. This is an automatic offer, so you don't have to apply to HMRC to get this put into place. They've just assumed that people will take advantage of it. And as I said, there's no interest for late payment. So it's one of those, it's better in your bank than theirs, is the thought process of it. The only thing you need to think about is the impact on cash flow, because if you don't save that July payment on account, there's going to be a much higher payment due in January, and it could be a bit of a shock to the system having to pay out such a large amount when you're used to paying a regular amount every 6 months. Next slide. So if you are struggling with the payment of your taxes, there is the HMRC Time to Pay helpline available. Now, from our experience of current clients doing this, for corporation tax, they've been offering around 3 months with no questions. They've just let you do it, which is really nice of them, because usually you have to really fight for time to pay. However, the PAYE and NI, they have only been allowing 1 month, presumably, but that's because in their minds, they're covering that on the furlough payment to you. So there's no reason why you shouldn't pay it over to them. But it's always worth giving them a call to see if there's anything, any time that you can get. But don't forget that the tax return, in whatever form, whether it's self-assessment or the corporation tax, must be submitted before you can phone them, because they want to actually see what the liability is on their system before they'll agree a payment plan. So the next one is the support for businesses that pay little or no business rates. So this was the business rates relief grant. It was for businesses that had small business rates relief and a rateable value of under £15,000, and you got a one-off grant of £10,000 to help cover your ongoing business costs. Most of the people that could get it, unfortunately, we found weren't solicitors, because your office spaces were just too big. So quite a lot of you weren't able to get access to this grant. But if you think you were able to get it and you haven't heard from your local authority, it might be worth contacting them still, because a lot of them did create an online platform within their council websites where you could go and make yourself known to them and say, we believe that we're eligible for it. So it could be a case of that they just didn't get to you because of that reason. So it's worth a follow-up phone call, or to see if that relevant portal is still available on their website at the moment. So if you didn't get the small business rates relief, the next slide talks about the new local authority discretionary grant fund that was made available. Now, this is any amount up to £10,000, and then also the £25,000. The £25,000 was relevant to the hospitality industry, so it's unlikely that any law firms would get the 25. The eligibility criteria is that you must be based in England, you have relatively high or ongoing fixed property related costs, you occupy a premises with a rateable value or rent payments below £51,000, you are trading at the 11th of March. So what you need to do is visit your council's website to apply for this, because they won't contact you automatically. However, it's not a guarantee. Basically, the government released information to the local authorities to say that they had to prioritise certain businesses, those being ones in serviced offices, so shared office space or other flexible working spaces, regular market traders, B&Bs and charities, and charities with an ethos in working in the community, so care businesses, for example. So those will all come higher on the list than law firms, unfortunately. And so it just depends how much of the pot's left to be able to dish out to everybody else afterwards. But I mean, even Charnwood Accountants as a firm, we've applied for it on the assumption that there's a likelihood we won't get it, but it's been made available, so we should at least try. So if you, on the .gov website, it does push you through to the link to your local councils to be able to apply for this. I think for some of the councils, they have put deadlines on when you can apply. One of them was the 22nd of June for a local authority. So it's worth going and looking at this sooner rather than later if you are interested in it. And also just to mention that if you did get the previous grant, you can't apply for this one. They won't give you both. Okay, next slide, please, Chris. So the coronavirus business interruption scheme. So this went live on the 23rd of March and enabled businesses to access up to £5 million in working capital. As it mentions, this was by loans, overdrafts, invoice financing and asset financing, depending on what other things you've done in the past would dictate which one of these you'd probably choose. The loans are available for up to 6 years, and the government said that they would cover the first 12 months of interest payments and any fees, and they've provided a guarantee on 80% of each loan. There is a list of providers, which the link is in this slide so that you can go and look at them. Not all of the banks did get involved with it, but you could apply for 2 other banks if you were interested in it and your bank didn't do it. This was much more difficult to apply for. You had to do things like cash flow forecasts. So later in this presentation, Chris is going to go through a cash flow forecast to enable you to do the application for those that haven't applied for it yet. But yeah, in terms of hoop jumping, there was a lot more involved. So smaller businesses were a bit shocked by it and steered away from it, which is government didn't appreciate because they wanted to try and help people as much as possible. So as a result, they released the one I'll come on to next, which is the business interruption scheme, and it's called the bounce back loan. So this was a much simpler application process, and you could borrow between £2,000 and £50,000. It was based on your turnover for the amount that you would get. But we've had quite a number of clients apply for this, and it's really simply a 1-page application form that takes approximately 10 minutes. And some of our clients applied and had the money in their account within 2 days because they don't ask any further questions on it once that initial application form's completed. So the interest rate after year 1 will be 2.5%, and again the loan lasts for 6 years, and the government will cover the first 12 months of interest and fees. And in this case, they're providing a 100% guarantee for each of the loans as well. And again, the list of providers that can be found on this slideshow, which we'll send out at the end if you want to follow through the links. So for the self-employed, because obviously a lot of that was to cover employment payments, the Chancellor mentioned on the 27th of March that they would be offering individuals self-employed support for businesses with profits less than £50,000. This included partnerships and LLPs where the partners were individuals, but if you're a partnership where you've got corporate partners, so limited companies are the partners, then you still wouldn't be able to claim anything for your dividends, which has been the case for all directors of all companies, unfortunately. This is done on a quarterly basis, so you get a quarterly payment that's based on £2,500 per month. The first claim must have been made by the 13th of July, so if you've not done this, you need to do it soon. And the second instalment is only going to be 70% to fall in line with the reduction of the furlough payment mentioned previously. And this claim will be available for you to make in August, for August through to October. So it's a taxable grant, and it needs to be reported on your tax return as if it was self-employed income. If you're eligible and you want to claim, as I said, you must make your first claim before the 13th of July. It's 80% of your average profits for the last 3 years. So that's 16-17, 17-18 and 18-19. If you didn't trade in those periods, they'll just look at the smaller the smaller years. So they'd look at 18, 19 only, for example, but they will base it on what's available. They contact you to do this. It's an automatic thing, so you don't actually need to make any application for it whatsoever, and it's paid directly into your bank account. Sorry, you apply for it, but they will do all the calculations for you, is what I'm trying to say there. And then you give them your bank details, they will review it and automatically make payment to you. So unlike the furlough scheme, where there's a lot of work involved in making those calculations, you don't need to worry about that on a self-employed basis. And so you must have also submitted your tax return for 18-19 as well. They did allow extra time for people to do this where they hadn't already done so. Obviously, it did need to be submitted by 31st of January, but they allowed you until April if you hadn't dealt with it already. You must have traded in 1920 as well for you to be able to claim this. So if you cease trading in 1920, then you won't automatically get this payment. And if you have also stopped trading, it must be because of COVID-19. So that would be the exception to that there. You have to have an ability to continue to trade afterwards as well. So they don't want people who were already planning to retire, say, to be looking at doing this, because that wouldn't be fair for the people that are continuing with their business. And if more than half of your income is from other sources, then you can't claim for this. So for instance, if you were self-employed but also received large dividends from a family company, if those dividends amounted to more than half of your personal income, you wouldn't be able to claim for the self-employed support. Okay, moving on to the next slide, please, Chris.
Okay, so this is now over to me. So I'm just going to cover maximising profitability in the law firms and cash flow. So essentially in the solicitor's practice, the income comes down to, quite simply, it's all about your chargeability of your staff and your partners. So to summarise it, it's chargeable staff hours times charge rate times recovery percentage, which in theory sounds very simple, but we all know in professional practices it doesn't quite work out like that. And then to get to your profit, it's income less chargeable staff costs, less overheads, simply to get down to your profit. So what I particularly want to cover today is in terms of staff recoverability. Essentially, if we're going through unprecedented times when there's a lot of uncertainty in business and the income levels are fluctuating significantly on a month-by-month basis for many law firms. So what I want to cover today is making sure you've got the right amount of staff for the amount of work that you've got. Now, it's not that easy to calculate, but there are some simple things you can do to make sure you're making the most of it. So what I'm going to cover today is really looking at the turnover capability you have in your business. So we all get the comments from the staff, oh, I'm too busy, I can't do any more work, get someone else to do this, I haven't got time. All those issues we've all faced, and it's how to have the ammunition to say to them, well, why are you really busy? What is it you're doing that is keeping you so busy? Are you chargeable enough? Are you charging the right amount of hours? How's your productivity? Are you doing too many admin tasks that the admin team could be doing? And it's really digging down deep into those numbers that will make your firm more profitable. And by having the right amount of staff and the right productivity levels, you can maximise your levels of profit. So there's a simple spreadsheet that you can complete. Now, I do this for our business, so I know at any point in time how many staff we need for the level of turnover we have in our business. So by quite simply going down all of your fee earners, working out the number of hours per week that they work, taking off non-working weeks, so holidays, statutory holidays, part-time hours, etc., and then look at non-productive times. So as partners of the business, you're going to be less productive than your fee earners. You're going to be out marketing, doing general practice admin, dealing with insurance, dealing with complaints, unfortunately, which have to be dealt with, dealing with staff matters as well, and that all takes time. So typically, most partners I come across are working 50% chargeable, 50% non-chargeable. in an ideal world, I would have my fee earners all at 80%, which some of them are, but others are around the 70% mark, and other staff members are around the 50% mark because they do a lot of compliance work for us, which is non-chargeable. So it's looking at those facts, and we can support that in our business because everyone charges time, and not just chargeable time, but non-chargeable time as well. So we have a very good reflection of what the actual productivity of our team is. And we can pull that through into the amount of work they do. Then look at the chargeable hours available, times it by the charge out rate, and that gives you the level of fees that those fee earners should be generating. Now, for a lot of firms, you can look at the fees generated from your matter listings for each fee earner, compare it to the production, and you'll have an over or under. If you've got an over, then fantastic, they're making you money. If you've got an under, you need to be digging down as to why aren't they billing enough for the hours they work. And as a general practice, you want to be looking at the total available turnover in the business from your fee earners versus the actual turnover that you're reporting in your accounts. If there's a shortfall, then it probably indicates that you're overstaffed. And then it's a case of looking down deep into it to say, well, why are we overstaffed? Who isn't performing? What work practices have we got that aren't generating enough profit? So once you've got that information, it's really looking at how you can use that information. And it's important to share it as well. So staff may think that they're really busy, but until you demonstrate that they're not, they might be busy, but they're not productively busy, they won't know, and they won't have any guide as to how to proceed on it. So it's important to set individual billing targets as well for them. Now, if they have those targets and there isn't enough fees in the firm to be able to achieve them, then that ultimately will come down to the partners to say, well, why aren't we generating enough work and deliver it? But you should have those targets anyway. Whenever I'm talking to my solicitor clients, I always advocate using a time recording system. Most of them do use the time recording system to track chargeable time, but very few of them actually track non-chargeable time, which is where you're going to lose most money. It's easy for staff to spend 3 hours of work on a chargeable piece of time, but realise they can't actually charge that time because it will go over budget. So they just dump it or just ignore it from the time recording system. If you have a system whereby if they're expected to do 8 hours a day, and 5 of those are chargeable and 3 of them are non-chargeable, and they need to track those 3 hours of non-chargeable time, then you have all of the information available to question them. But you put an hour down to emails. Why haven't you charged those emails to your client matters? And it just gives you all of the information to make sure your staff are charging enough hours and the hours that you're paying for. You will have some superstars in your business. Most solicitors do, where they outperform everyone else. Make sure you encourage them, you reward them accordingly to keep on hitting those targets. But for the non-performers, you can't give them anywhere to hide. And by not charging time and time recording properly, they've always got somewhere to hide. The other thing to consider is fixed fee work, particularly conveyancing. Now, most of the solicitors I work with realise that they lose money on conveyancing, but it becomes a bit of a loss leader into other work, probate, wills, inheritance tax, etc. So they're happy to take that. But for those that really do want to drive down into numbers and time record properly, it might be a case of, well, we've got 3 qualified solicitors earning $45,000 a year in the conveyancing department. Why don't we have 1 qualified solicitor and then 3 assistants in that department achieving the same work and making us more profit? And then you could adapt the charge out rates accordingly for the level of costs in your business. So a few things to think about there. So just moving on to cash planning. So at the moment, there's a lot going on in businesses, particularly for those that have taken on debt, particularly the bounce back loans, the business interruption loans, or even deferring the VAT for the first quarter. So it's important to plan for your cash, because what you don't want to do is get to a position where in 6 months' time, you've got £100,000 of cash to pay out for the VAT and you haven't got it. You may also have your July payment on account that's been deferred, and again, you haven't got that money. And that's why cash flow planning is very important. In addition to building up the debts as well, you've also got to consider, are we making enough money on a monthly basis to cover all of our fixed costs? And within the solicitor's practice, we include staffing costs in fixed costs because most solicitor practices have long-term permanent staff contracts where everyone's on salary. Very little firms have salary costs that are contingent on performance. So what you need to include in the cash plan is all of your staffing costs, building costs, rates, insurance, subscription, IT leases, electricity, and I'll also come on to loans as well, because a lot of practices have loans which need to be facilitated in this. So the simple basis, it's worth just having a spreadsheet with months along the top, costs down the bottom, and get to a basic fixed cost summary. So I've just put some examples in here. There will obviously be more than this. Direct drawings also needs including. For most practices, you will either be an LLP, a sole trader, or a company, whereby the drawings come out of the profits of that company. So whilst they won't necessarily appear on the profit and loss account because they're dividends or drawings, they are a cash flow movement, so need to be included. Other costs that you need to bring in. So I've worked on the basis that your income you're keeping as gross income, so including the VAT will come into the bank account. So that's going to bring about a VAT liability. And because most VAT is paid quarterly in arrears, you're building up a significant debt that you're going to have to pay at some point in the future. So it's important that when you get to each month end, you don't look at the bank balance and think, right, great, I've got £20,000 in there, I'll take out 10. If you've got £50,000 of VAT coming up, you're going to need to put that aside to make sure it's manageable coming up. So other costs, I've included wages in here with the associated PAYE pension payments. These might be for staff, but they could also include commitments for the owners. So if you have employee contributions going through for the directors, or as your personal contributions being paid by the partnership, which many firms do, that also needs to be included. In here as well, for a lot of partnerships I look after, they have their company car payments going through here, so that would need to be included as well. Other things to factor in, loan repayments. If you have any regular bank loans, you should include them in here, or any other balance sheet items. So if you've got a retired partner, for example, where you agreed to buy their goodwill and you're still paying down that debt, all of those costs would need to be included in here, because whilst they're not profit and loss items, they still have a cash impact on the business. And then we'll come on to income. So typically for income, it's all about the turnover that you generate. But at the moment, that's a little bit more complicated because for most businesses, we've got the job retention scheme income coming in. So that also needs to be factored in. I've just done a quick example on here. So you may have some old balances, some old debtors, which can be recovered. So it's important at the current time to maximise your cash inflow. So if you've got debtors outstanding, it's worth picking up the phone to them and trying to collect those amounts. Now, for most of you, it's a case of really looking at your matter listings and taking the money out of the client account for billed items. You should also look at your WIP listings. If you've got some significant items of work in progress on your matter listings that should be billed, why aren't they being billed? Also consider raising interim bills on large probate cases if you can, because that will help your cash flow. So if you come down to your total income, and then it's just a case of really pulling that all together to show your cash position. And by doing it over 6 months, you can get a good idea of how the business's bank balance might look, subject to your income projections. Now, income projections, the best way to look at that is look at the pipeline of work that you've got in, new matters raised, and then the average fee for those matters would be a suggestion for the first 3 months, and then projecting that forward. I'd also make sure you look at some long-term cash flow planning as well. Like I mentioned, if you deferred your VAT payments for March, February, March or April, then that's going to need paying next March. So that needs to be factored in. Same with the tax in January that's coming up. if you're taking out a bounce back loan or a CBILS loan and don't want to pay the interest or take on long-term debt, that also needs to be factored into the calculations. So what do you do if you've got a cash gap? As we see here, they're expecting this cash back gap to continue month on month throughout this period. So the obvious answer is looking at your staff. If your staff aren't generating enough income, then it's a case of, well, do we need to look at how many staff we've got to make redundancies? Now, it's always very difficult to make redundancies. For anyone that's been through it knows how emotional it can get. But we all have a duty to protect our businesses. So if redundancy is inevitable, then you should really be starting that process now to make sure it doesn't cost the business too much in the long run. There's obviously bank finance available for overdrafts, loans, or asset financing if you have significant equipment in the business. Also look at personal funds to inject. Now, this might not be suitable for everyone, but if it is a short-term cash flow requirement and you can see light at the end of the tunnel, it may be that you've got significant wealth personally that you can put into the business without taking on any expensive debt. You should also look at the fixed costs of the business. Can you come up with arrangements with leasing companies, for example, or defer rents, arrange rent reductions, etc. If you're used to paying your suppliers on invoice, try to arrange some supply terms. 30 to 60 days will help with your cash flow. And then time to pay agreements, such like Paula mentioned, will also help with cash flow. And then get customers to pay sooner, raise invoices quicker, make sure your staff are instructed to raise invoices as soon as matters are close to completion. And also look at luxury perks that you give to staff. If you've got gym memberships, private medical, etc., consider now, is it appropriate to carry on those subscriptions? Because they're costing you, the business, money for the staff perk, and they're also costing tax on top of that. So if you have settlements agreement to pay the tax on behalf of the employee, or even just through the normal P11D system, you'll be paying national insurance on that. So it's costing you more than the basic cost of the subscription. And then if things are really bleak for your business, then you should really think about stopping trading. If there's clearly no light at the end of the tunnel and you can't see anything else but closing the business, then it's important to look at that, making that decision early, so you don't take on debt after debt, possibly putting in personal guarantees in place. It's important to look at protecting your personal wealth as much as possible in order to stop a potential liquidator coming for you personally. So if you think this is an option, it's important to take advice early, and I'd be happy to talk to anyone that's in this position. So what you could also do is build into your cash flow planning what-if scenarios. So one way you could do this is look at your monthly billing for the last 12 months and say, right, on the best case scenario, we'll do 100% of what we billed last year. So that forms your income. You could then look at a worst case scenario and say, well, what happens if we only bill 50% or a medium of 75%? That way you can look at what level of cash you'll have if your fixed costs remain exactly the same, but with different scenarios in terms of your income. You could also do that with the staffing costs. So say at the moment we've got 8 staff members. What happens if our income reduces to 75% and we reduce our staffing to 6 out of the 8? And having to play around with those numbers as well. So the idea behind this is really just to create a rough plan of where you're at. Now, cash flows and profit forecasts become redundant pretty much a day after you've done them, because we don't live in a perfect world where we plan to achieve something and it happens exactly. It's a guide to give you an idea on how to make decisions. It needs to be reviewed and updated as situations change as well. With the climate we're in at the moment, businesses are starting to open again. I've been talking to quite a lot of estate agents and they all seem very busy at the moment. So hopefully your conveyancing departments will be picking up soon as well. So it's important to reflect on information that's coming out and making sure that your numbers are updated accordingly. Well, I'm conscious of time, so I want to leave some time for questions if anyone's got some. So I'll just come on to this. So as a special offer at the moment, we're offering a free 2-hour benchmarking review and target session for any solicitors that would like that. So that will be using our benchmarking software system, which you can do yourself for free at the moment on charnwoodforsolicitors.co.uk, and that will give you a comprehensive benchmarking system to review your financial performance of your business. For anyone that wants any more support than this and wants some fully integrated cash flows being prepared for their business, we can do this for a fixed price of just under £2,000 plus VAT, which is nearly half the normal price. This will give you a very comprehensive viewpoint on the cash flows of the business for the next 12 months, and we can extend it for 2-3 years into the future if you want us to, if you're planning on taking out any CBILS loans and want to see how this interacts with the company cash flow. And there's an extra incentive, we can arrange payment terms for this work over 6 months. So if anyone is interested in this, please drop us a message and we can have a phone conversation to take it further. There is a time scale on this. We've got staff going on holiday and whatnot over the summer. So if you do want to take us up on it, please do so as soon as possible. So just to conclude on the presentation, if you do need any help on any of these matters, then by all means do contact us. If you email Paula first, who heads up our solicitor department, she'll be the best place to liaise with you on it. There's no questions in the Q&A box. Has anyone got any questions or would like any advice on anything? If you do, please put a comment in the Q&A and we can get you on the chat.
Just to also add for people, we run along with a HR consultant a weekly webinar for 1 hour on a Thursday. So if you do want to ask any questions and you don't have your own HR support in place, if it's to do with redundancies and things like that, it may be worth listening to our webinar because you can submit anonymous questions and get some simple feedback to help you with your thought processes of what to do next. If you're interested in it, do drop us an email or also sign up to our social media because the links go out weekly for you to be able to watch the webinar as well.
Right, it doesn't appear as though we've got any questions, so we'll end the webinar.
One's just come up, I believe. Oh, it's a thank you.
No,
thank you very much.
So thank you for everyone attending. If anyone does have any queries, by all means drop Paula an email or give us a call. The number's not on there, but it's 01 509 621 833, and we'll be happy to help. Thank you everyone. Enjoy the rest of your day.